Welcome back to Freedom Finance with Lanny, guys. Thanks for checking with me here on this Sunday, and wanted to get some content out there for you guys. And as an investor, especially investing in the stock market, there always comes a time when you want to possibly sell your stock position. So today's video is actually going to focus in on 5 more stocks that I'm looking to sell sooner rather than later. It could be this upcoming week or within the next upcoming 4 weeks. And, again, looking to sell 5 stocks. The market value is north of $10,000 here. And I'm going to break down each stock, why I would sell, and then ultimately what the dividend yield is from each company, the dividend income that it gives me currently, because again, you guys know, trying to reach financial freedom via dividend investing, building up that dividend income on the way to financial freedom, guys. So I want to talk a little bit about that. That way it gives you a little bit of more, transparency behind the curtain of some of the dilemmas that, I'm so lucky to kind of deal with here from an investing standpoint, guys. So I got 5 stocks that I'm looking to sell. I'll break down again the reasons why. And then ultimately I'll talk about some options, of what I might do with the proceeds of the sale. And you better believe we're going to look at the tax impacts as well, guys. So grab your favorite beverage, your beer, your liquor, your wine, your espresso, your coffee, because you're Italian this weekend, guys. And let's dive into the 5 stocks I'm looking to dump and what I might do next. Let's get it. All right, guys, thanks for coming back. Again, I'm showcasing a couple of these fun things over here. You got my PSA 10 Jordan, PSA 10 Pokemon right there, little Kevin Love bobblehead. Got to give props to the Razor Ramon on the Funko Pop there, guys. RIP. But let's get into the 5 stocks. Again, if you remember, I own at 1.70 different stocks from earlier this year, and I was actually able to exit quite a few at a point in time a few months ago. I'm currently at 66 stock positions. Again, this is all part of that goal to simplify. So if I'm able to get down 5 more stock positions and not to create a new position with the proceeds, I'd go down to 61 different stocks. Yes, I don't recommend it. It happens. A lot of spin-offs, and actually 3 of these are spin-offs from companies. So 3 out of the 5 I didn't even ask for, I didn't personally invest my money into. But it happens, and you can clean up. You can realign your portfolio, taking stuff out of positions and put them into current positions that align with my goals. Again, my goals to find high quality businesses, invest in them, and those that pay a dividend and an increasing dividend. Again, you need to look at high quality as in profitable, liquid, and well managed on the balance sheet side of things, guys. So that's kind of where my attention has been, especially in this high rate environment. But let's get into it, guys. I don't want to take up too much of your time. We'll see if I can get this done in under 10 minutes for you guys. The first stock that I'm looking to sell here came from 3M. MMM is their ticker symbol, and that company is called Solventum. Ticker symbol is SOLV. Should have dumped them right when I first got them, back when they were in the mid to upper 60s. They're now in the low 50s. And, I currently own $586.62, sitting on a $386 unrealized loss. They currently don't have any current plans to pay a dividend. And it was a spinoff, from 3M company, something that, again, I didn't specifically go out to invest my own dollars into. And obviously it's only gone down since I've owned them. Now, it doesn't pay a dividend either, as I said, so that's part of one of the reasons why I want to sell the stock. And I've learned through the majority of all the spinoffs that I've had to just dump them. Dump them within the first few days of receiving the shares. Not professional advice, but just in my experience, I should have done that. And I can go back, there'll be another stock on this list where I should have done that as well. But again, that's why I want to dump it. Doesn't align with the portfolio, indirectly doesn't have a dividend. And then third, it was from a spinoff. So I didn't research and invest in it myself. So just keep that in mind, guys. Now, the next stock is interesting. We're going to get into WestRock. Ticker symbol is WRK. Now, I did invest in this company. It's a packaged in paper, company essentially. Check out the bottom of your cardboard boxes, especially your diaper boxes. You might see those there. I know, being a proud father, I've seen WestRock, smack dead on the bottom of those boxes. So check out your cardboard boxes when you see them. WestRock might be on the bottom. So they're actually getting acquired. The merger's been approved, and by Smurfit Kappa, and they're going to be forming a new stock. Now, this is going to be a taxable event, and they're an international company based in Dublin, Smurfit Kappa. So the new stock is going to be a combined entity. It's going to be a taxable event for me already. Essentially, the value that us WestRock shareholders are supposed to be getting is around $48 a share. Well, it's trading north of 50, so it's actually trading above the premium that was already paid by the Smurfit Kappa company. So it's a good time already to sell it if I don't want to own the new entity. And I don't really want to own a new entity that's international based, that's based in Dublin, Ireland. So that's part of it. Part of it's to capture this value. I'm not a international paper goods and package company, and I don't like the irregularity of a dividend where usually they only pay 2 times a year, and it's, there's a lot of currency translation that you have to do. And right now, WestRock's yield is only 2.39%. It used to be in that 3.5% to 4% range when the share price was much lower, but typically when you get acquired, you get that premium bump, and they have had hell of a premium bump to WestRock shares. So I have actually $7,751 of WestRock in unrealized gain until I trade it. It's $1,429.16. So hey, some of that gain's already offset with some of that loss from Solventum. Currently yields 2.39%, delivering me about $185 in income annually. So to break it down, the reasons why I'm selling, would want to sell WestRock is A, it's trading over their premium of what they're even worth right now. B, I don't want to own another international company that pays a irregular dividend, which the yield might be higher. I think it's around 3.5% right now for Smurfit Kappa, but that pays maybe twice a year, that's based on a lot of currency translation. And then third, it's already going to be a taxable event at the time that the shares transfer. So I'd rather move it into another company that I own already. All right, let's get into the third stock. Right now, it's easy. It's Dow Chemical. Ticker symbol is Dow. And I own $1,657 of this company, sitting at about $139 unrealized gain on them. They pay a 5.19% dividend, paying me about $86 annually. So that's a higher yield. And it's been flat, right? Dow, if I, search Dow Chemical stock right here on my computer, they haven't moved much at all. I'm only, again, up a couple $100 in unrealized gains. If you look at the last 5 years, really has stayed fairly flat. And they don't increase their dividend, guys. So in a nutshell, they don't increase their dividend. They've traded pretty flat. And I already have a huge position in LyondellBasell, LYB, which has had their stock price grow quite a bit. Obviously, their increases to their dividends have been fantastic. So I haven't been able to complain yet about LyondellBasell. So that's kind of my chemical position. So hopefully that breaks enough down for you for why I would sell Dow Chemical. Let me know what you think about that. The next one is another spin-off from GlaxoSmithKline, GSK. They spun off their consumer division called Haleon. Ticker symbol is HLN. And I own $825 of this company at $180 unrealized gain. They have a 2.48% dividend, producing about $20.45 in forward income. In a nutshell, small position is one of the reasons at under $825. So, it was a spin-off, so it's not something I directly invested into myself from research, from liking the company. And then third, again, another international-based company that I don't want to have an irregular dividend, as well as not knowing what that amount might be just based off of all the translations, guys. So that's that. Now we're going to get into the fifth stock very quickly, and we're over 10 minutes. Sorry, guys. Like the video though, subscribe to this channel if you haven't. Let's get into stock number 5. Warner Brothers Discovery. WBD. Yes, it's still on this list. I still have this piece of crap in my portfolio. $488 of value, loosely termed here, at about $1,700 of an unrealized loss right now, guys. I'll say it again, a $1,700 unrealized loss. Should have sold this one right when I got it from the AT&T split off. And it doesn't pay a dividend. So why would I sell WBD now? Isn't there a better chance that it's going to skyrocket or pop? Well, it hasn't. In fact, if I look at just what WBD has done this year alone, they have dropped 38% more. They have dropped 39% since last year, and they have lost 71% of value since the split off. So not too happy. Now that would wipe out pretty much all of the gains and then some. I would actually still have a net unrealized loss or net loss to carry forward on my tax return, which will help there. But in a nutshell, it was a split off, should have sold. B, no dividend. C, no growth in the streaming wars. If you guys know everything that's going on with Paramount and Global, not a good business to be in right now. So in total, we're talking $11,308.21 of value of proceeds I would get from these sales, a $334 net loss from all of these. I would lose $291 of forward income at a yield of 2.58%. So that's a lot of money, $11,300. So what would I do with that? Well, I would get back to quality, get back to simple, right? I would look at PepsiCo, probably some Starbucks stock I might look at, Archer Daniels Midland. I'd take a look back at them. Quality might be questionable with what was going on with their CFO practices there. I debated about starting a position in PACCAR, PCAR, or in Snap-on, SNA, but I'm not sure if I want to start a new position yet. But it's possible. Again, I'm trying to keep my stock positions lower, but at least I'd have the funds available to really make a splash in a high dividend, high quality stock here. But those are just a few names. Again, Pepsi, Starbucks, maybe Johnson & Johnson stock. Again, those are just some names that I see that should have some undervaluation right now in the stock market. I'd consider doing the ETFs, but then it would kind of, I don't know, I'd have to get down to a good weighted average to make sure it's at least at or above the current yield of 2.58% on this sale. But knowing Starbucks and Pepsi, I should be just over that. Plus, I'd get closer to 100 shares of both of those stocks. But let me know what you guys think, guys. Again, I'll put this, hopefully you've been able to see screenshots throughout this video. I'm trying to be transparent with you in the life of an investor, in the life of somebody who's trying to align their portfolio, manage your assets to align with the strategy of what you're trying to do within your house, guys. Leave comments below. Where else would you put your money? Let me know. Again, I can't wait to see the feedback. If you haven't, like the video, subscribe to this channel, and I'll catch you on the next one.